Good morning, everybody. So yesterday, the Fed did hold its interest rates. They had their meeting. The Federal Reserve is the U.S. central bank, so that's the U.S. version of the Bank of Canada. It's also the most important central bank in the world. They held their meeting and they held interest rates. So they kept them as is, no rate, no increase, no decrease. They kept them steady where they are. But yesterday was very important because the Fed did release a lot of information about their projections. And their projections for the economy in the US is actually a lot worse than they originally thought. So they've actually revised downward their expected GDP growth from 2.1 to 1.7. They've also increased their unemployment projections from 4.3 to 4.4. Now, you would think this is bad news, and it is bad news. But the markets did react to this. The S&P 500 actually went up when this information came out. You can see that here. Now, why would there be a surge in the markets with bad news? Because we're at a point now where bad news is good news, as in the worse the economy is and the more they're admitting how bad it is, the more opportunities for further rate cuts, which is important for companies who are having a large amount of debt that needs to be refinanced this year. Lower interest rates will help them stay solvent. That's why, in this case, bad news can be good news. Now, if we look at our own bond yields, I pulled the 5-year bond yields this morning, and they've been going down pretty steadily. You can kind of see here, even after we had our inflation print that was at 2.6, as I reviewed before, that was gas prices and that was a tax holiday. But also one of the main culprits is mortgage interest. So like I've told you guys before on Monday when I said be careful about how you react to that inflation print, yields have been going down, which means the potential for lower fixed rates on mortgages. Also, I still do believe that in April, they will be doing another interest rate cut of 0.25%, which means lower variable rates for you as well. The doom and gloom, there's a lot of doom and gloom out there, but you got to look at the numbers to make proper decisions.